Morning everyone. Welcome to Ainsley News, Crypto Tuesday. Have we seen the crypto bottom? After 3 months in a persistent downtrend, the Bitcoin market has found some strength, with the market trading above and holding the psychological $40,000 level. Throughout 2021 and 2022, the $30,000 to $40,000 price range has proven to be a sturdy support level for Bitcoin bulls. In 2021, this range was defended after the 50% drawdown in May, July, provided support in the September correction and has once again been a source of bid support in Jan-Feb this year. The URPD metric shows the distribution of realized prices for the current Bitcoin UTXO set. Here we can see that 2.351 million Bitcoin, or 12% of supply, have been transacted between the $36.2 thousand mark and the $41.2 thousand mark. Even with these coins being redistributed to lower realized values, the market remains top-heavy, with more than 25% of the circulating supply having last transacted at higher prices. As the market pushes higher, one mechanism driving it may be the squeezing of late entry shorts. Inspecting the long liquidation dominance charts shows that shorts have been on the back foot this week, with a minor skew towards short side liquidations. However, the magnitude of this metric remains fairly lackluster, indicating that it is unlikely that price upside is being primarily driven by a short squeeze. This is largely confirmed by the one-day change in futures open interest. We have not yet seen the characteristic deleveraging event, where a large volume of open contracts is forced closed. Futures open interest does, however, remain elevated at around 1.91% of the Bitcoin market cap. It's around $15 billion. This may indicate the probability of a short squeeze is lower than first estimated, or that such an event remains possible should the market continue higher, reaching clusters of short seller stop-loss liquidation levels. Looking at the spot or on-chain markets, we can see that the Bitcoin network saw an impulse of new net entities this week, pushing up net growth of 18.5 thousand entities per day. Through 2021, large impulses of net entities have occurred around volatile periods such as bull market corrections in Q1, Q2, and during the 50% sell-off back in May. June to December 2021 was a period of quiet accumulation, with a stable baseline of 12,500 net entities entering the network per day. As such, the recent spikes in Jan and Feb may suggest a tentative transition out of hodler-dominated accumulation, or at least a renewed interest in Bitcoin after trading down to more attractive entry prices. For the first time since late November, short-term holders, or STHs, have seen a profitable day, with STH SOPR breaking above 1.0. This indicates that coins were spent, and younger than 155 days realised profits on aggregate this week. This follows more than 2 months of realising losses every day, as short-term holders who bought the top were shaken out of their coins at lower prices. A similar short-term holder SOPR pattern can be seen in 2 instances since March 2020. After a long period of losses, the market managed to break into a bullish uptrend, with the STH or short-term holders SOPR retest of 1.0 to confirm. Should we see STH SOPR break higher again, it indicates renewed profitability and demand inflows are absorbing coins. Conversely, a break back below 1.0 would be a bearish indicator and suggests there's insufficient demand to support sell pressure from short-term holders. We can also see a fairly dramatic bullish divergence playing out on the 14-day market realized gradient, or MRG oscillator. This metric models the degree of momentum in market pricing relative to the natural capital inflows captured in the realized cap. The general interpretation is as follows. Successive higher or lower peaks indicate increasing momentum to the upside or downside, respectively. Breaks above or below 0 indicate that a new uptrend or downtrend is in play, with an anticipated swing duration of 14 days. Where the market top in March-April 2021 showed a bearish divergence, that's declining market momentum with high highs in price, the current period reflects a bullish divergence. With each new price low set, there is reducing the momentum to the downside, and the 14-day MRG is now convincingly broken above 0. The 28-day MRG shows a similar market structure, providing confluence and magnitude to the argument for at least a local market low being established. The upswing swallows a fairly persistent three-month downtrend, which pushed the monthly return profile for Bitcoin well into negative territory. A few charts shown today, so check them all out. And they're showing Bitcoin returns as percentages over a rolling 30-day window, with negative returns of negative 30%, historically signalling oversold conditions. Monthly returns have only been this poor in 5 periods in the last 5 years. And there are here some points. The corrections in Jan to April 2018 started the bear market. The November 2018 bear market capitulation event. The March 2020 market-wide sell-off as COVID locked down global economies. The May 2021 sell-off and deleveraging event. And the yield-to-date performance in 2022. There have been many approaches and models proposed to valuing Bitcoin over the years, and the assessment of any set should be accompanied by confluence between numerous metrics and indicators. One of the simplest but still very powerful tools for this is the Mayer multiple, calculated as a ratio between price and the 200-day moving average. The 200-day moving average is widely observed as the long-term bull-bear indicator in technical analysis, and is such steep deviations below it can indicate a degree of undervaluation relative to a long-term mean. The Mayer multiple traded below 0.8 this week, representing a 20% discount relative to the 200-day moving average. The price level representing a Mayer multiple of 0.8 is $39.1 thousand US, which the market has now reclaimed, calculated at 0.8 times the 200-day moving average. Similar to the monthly returns metric, previous instances of Mayer multiple trading below 0.8 typically correlate with severe drawdowns in bear markets, particularly during market-wide capitulation events, for example, Jan 2015, November 2018, and March 2020. As the Bitcoin price bounced from multi-month lows, we investigated the potential driving mechanisms and evaluated the support provided by investors in the $30,000 to $40,000 range. The market lows of $33.5 thousand set last week were associated with historical undervaluation across a range of metrics, including the Mayer multiple, RTLR, and the monthly return profile. The market remains top-heavy in supply distribution, with over 25% of all Bitcoin holding unrealized losses. However, there is a reasonable degree of momentum behind this current rally, with STHs returning to profitability and the short-range MRG oscillators flipping positive. The key to watch moving forward is whether the long-term holders and older coins take exit liquidity, and whether the rally can be supported by renewed demand, which has been lacking in general since the May sell-off. And that's today's crypto, specifically Bitcoin, insight for everyone. Thanks for joining us. Jump over to ainsleywealth.com.au if you're looking to buy, sell, or exchange crypto today through Ainsley. Still after the physical stuff or curious about gold? Jump over to ainsleyBullion.com.au. Some great new coins out by Perth Mint today and available through us. With the 1/10th gold kookaburra and the 1/10 ounce platinum cookie. Go and check them out. Available now online. And goldsilverstandard.com. That's our own cryptocurrency built and backed by real gold and silver. We'll catch you tomorrow for more news.